What's up everyone, it's Scotty with MoneyVest. So in this video, wanted to talk a little bit about this week in particular because it is going to be an important week and of course the big day that's coming up on Friday, both from a macroeconomic standpoint and also from a technical standpoint as well, because the more we go back higher, the more we see a little bit of rebound and a dead cat bounce here, the more we get closer to that resistance, at which point, of course, is going to be a big battle between the bulls and the bears, whether we get a breakout or a rejection. And that's exactly what I want to talk in this video. As always, if you enjoyed, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below. There is a 16% annual discount available till the end of this month. I opened up a couple more spots if you are interested in joining us and of course getting access to all the alerts, all the members only private videos, intrinsic value spreadsheets. Everything is going to be included with the link down below. We'd love to have you on board. So this right here was a report that came out today. So US stocks may bounce this week, but summer sell-off is only halfway done. So one of the analysts pretty much mentioned that US stocks might find some relief this week, analysts say, but that doesn't mean that this late summer sell-off is over. And that's also what I mentioned in one of my other videos from over the weekend. Over the last 10 seconds, I made a prediction for this week for the market that, like I said, I also do expect the markets to actually be rallying this week and for us to see a green week. Rather than any bounce, we will likely be reprieve before the S&P continues to trade sideways and of course slides towards 4,200, the next major support level for the index. And in a handful of research notes shared with MarketWatch on Monday and over the weekend, technical strategists noted that several indicators suggest the S&P 500 and the Nasdaq 100 have reached oversold territory as well. And for example, as of Friday's close, just 15% of S&P 500 stocks were trading above their 20-day moving average, something that BTIG's Jonathan Krinsky and Jeffrey DeGraff of Renaissance Macro also noted in the chart. Now, why are those indicators so important? Because markets are, in the short term, can be oversold. In the long term, may still have more downside, right? So it's very, very normal for us to see in a downtrend or in an uptrend for us to ebb and flow where the markets go up, go down, go up, go down. And that's usually the process of these market cycles. So right now in the short term, as I said before in one of my market updates, that we are indeed in a short-term downtrend, meaning that we are trading below those moving averages. We are making lower highs, we are making lower lows. So it's very normal for the markets to get a bit of a rebound, considering how oversold we are, which we've talked about. A lot of individual stocks broke down below their support levels. They were also oversold. Not to mention this right here, the S&P 500 stocks above 20-day moving average is at 16% oversold as well. So every time we come down to, let's say, under 7%, we get a bit of a bounce back higher. It doesn't even have to be 7%. Every time we come down to like 12, 13% for this indicator, we get a little bit of a bounce back higher. And that's exactly, I think, what we're witnessing in the markets, considering that once again we came down, oversold level for the RSI, the MACD. Again, you can notice RSI came all the way down to 35, MACD was oversold, so we're getting a little bit of a bounce back higher, right? So NDX in a very similar situation as well, that it came down again. RSI, you'll notice, came down to as low as 34, so was the MACD. So very, very nice momentum back higher. Now reading further, this right here, again, 15% of names above their 20-day moving average. This right here is the, of course, RSI of that indicator itself that I just showed you guys in my chart, oversold. And this right here is the put call ratio, and also the 3-month forward, looking at the so 10-day US equity put call ratio, which recently spiked to its highest level of 2023 as traders have loaded up on put options, which again is another really good metric and understanding on how the markets are positioning themselves. And of course, as investors have kind of loaded up on puts, that's prior to the Friday's big Jackson Hole Economic Symposium and of course Jerome Powell's speech, which makes sense because everybody wants to hedge against that potential sell-off if and when that actually does happen. But right now, of course, it can also act as a contrary indicator that if there are a lot of put options open, it's possible the markets actually does the opposite of what everybody's kind of placing trades on. And so we do see a little bit of a rally back higher. So it is, I think, in my opinion, very normal for us to see that momentum back up. This is, again, the S&P 500. So every time we have seen, they're basically pointing out to the idea that every time we have seen the put call ratio spike to such high levels, we have seen the markets basically push higher from those levels again. So this is again the last time we saw the put call ratio jump up to over 1.5 levels, and this right here is once again one of those times where the S&P 500 rallied back higher as the put call ratio also has spiked a little bit to the upside. So for this week, I think I wouldn't be surprised if the markets do continue on this momentum. a little bit further. But as I pointed out in my other video, the real test for both the S&P and the NASDAQ is going to happen at these resistance levels. So for S&P for remainder of this week, I've got maybe another 1% upside until Friday. And then Friday is what's going to really dictate where we end up going after that, whether we get a breakout past this level, past this moving average, and regain that momentum, or if we get rejected from those levels and of course basically rotate back lower. But in my opinion, if you are someone who's a day trader, you may want to look into TQQQ's intraday for the next couple days, as it does have potential to continue to make that uptrend, making higher highs, higher lows intraday. But then of course the real test and the battle is going to be at that resistance. Same thing is true for the NASDAQ. I maybe do expect some another upside 1 to 2%, maybe 2.5%, getting up to as much as 13,800, but then it's really going to come down to this level right here. It's going to be a collection of both that moving average, the 21 EMA, and of course this resistance where we have previously gotten rejected at. So that's going to be that level to really be paying attention to, and whether the NASDAQ can break outside of that resistance or get rejected, sell right back down, continue on this downtrend, make lower highs and lower lows, and maybe we've got more potential downside left in the tank, because September is on the horizon. September is the worst month of the year for the market, seasonality wise. Of course, we know Q4 is the best. So that's where we are in the markets right now. Again, you guys know where my fair value is on the S&P. I did a video on this earlier, so that's really what the level is going to be for me, where I start to kind of deploy some dry powder and start buying a little bit more aggressively again. But hope you guys enjoyed this video and found it helpful. Let me know your thoughts down in the comment section below, and what do you think about the market technicals going into this very, very important Jackson Hole Economic Symposium. And as I've already mentioned, the market discrepancy is not that much, right? So market's only pricing in for one less rate hike compared to what the Federal Reserve told us. So I'm not expecting like a huge sell-off after the Jackson Hole like last year. But yes, it could create some volatility if the Federal Reserve Chairman Jerome Powell continues to be very hawkish and says, you know, we've got a long way to go. Inflation is nowhere near our target. So we are going to do everything we need to do in order to bring inflation down, even if that means breaking the economy. Because let me tell you, it's a brutal truth, but Jerome Powell doesn't care about the economy. He cares more about inflation. If it comes down to it, push comes to shove, he is going to be making sure that inflation comes down. Doesn't matter what happens to the economy. So hope you guys enjoyed this video. And again, I'm super excited. I will be live to cover that Jackson Hole Economic Symposium. Again, August 25th. That's going to be on a Friday at 10:05 a.m. Eastern. I'll be live to cover that on our channel. So as always, if you enjoyed this video, found it helpful, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below. There is a 16% annual discount available till the end of this month. So you can take advantage of all the buy and sell alerts, options alerts, trade ideas, members only private videos, intrinsic value spreadsheets. Everything is going to be included. So I'd love to have you on board. As always, happy investing, and I'll see you all in the next video.